Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we're looking for an impulsive structure to the downside in 5 waves, currently working on a wave 2. As you can see, the 0.382 has been hit multiple times, which is a less common target for a wave 2 taken from the high to the low of 1. Most common targets are between the 0.5 and the 0.786, which is between 28.9k and 29.5k. Now in this scenario, what is very interesting is that this wave 2 is incredibly long in time compared to this wave 1 over here. Most commonly, a wave 2 will end between the 0.382 and the 1.618 fib time taken from wave 1. But as you can see, this wave 1 is just one 30-minute candle, and then you have this enormous wave 2, which really lowers the probabilities of this particular scenario and increases the probabilities. This is either an ABC or a WXY, or this is a more bullish scenario where we are soon to end the corrective structure and continue towards the upside. But in all these cases, a little bit more upside is preferred, also because of what we see over here. If this 3-wave corrective structure in an ABC was finished and we were looking for more downside in an impulsive structure, you want to count an impulsive move. Now, the regular impulsive structure is not possible over here, so then you have to think diagonals, but a contracting and an expanding diagonal is also not possible in this small range, as explained yesterday in the live stream as well, which increases the probabilities that price will eventually take the high, which, funny enough, it does during the video. How nice. Great surprise. So yeah, the probabilities are the same as mentioned yesterday the whole day, that price is looking then to take this high, which it has done right now. So that's actually very, very nice. Now, a potential local bearish scenario though for a wave 2 or a bigger ABC is then this scenario where you have a W looking for an X triangle and eventually a wave Y to the upside. 0.618 to the 1.236 is a target area between 28.7 and 29.4k. Most commonly though in between this area, the 1-to-1 to the 1.236, which is between 29.1k and 29.4k. Kun, you gotta try to focus with this move to the upside. The bullish scenario over here is that we have a wave W to the upside, then a wave X zigzag and a triangle in a wave Y. Now, in this particular scenario, most commonly a target for a wave Y is the 0.618 taken from the high to the low of W to the high of X, and also the 1 to the 1.236. But if wave Y is a triangle, it can be very, very, very shallow and also stay inside the price section of this wave W as well as this wave X, which in this scenario would be the case for wave Y to then finish and continuation to the upside. Now, if we look at the confluences around the range, then over here, just above price, I had a point of control. And this point of control at 28.930 is the point of control of this move to the up and the downside. So what I did is go to the 5-minute, pull yourself a volume profile of this candle to the upside and a few candles down, and you can see that the red point of control is at this level, which always is an interesting level in moves like this. So currently, as you just saw, price actually hit this level and has a bit of a rejection. Very nice indeed. And below price, we do have a double bottom at 28.328. If we look at the CVD divergences, another interesting reason to look for a bit more upside besides price action giving us the probabilities for a move towards the upside was because of the bullish CVD divergences building at the same time. So over here we had bullish CVD followed by more bullish CVD, and then over here we got another move to the downside and more additional bullish CVD. Higher lows in price, lower lows on the CVD. Now, of course, we did have over here bearish CVD divergences, but this bearish CVD divergence came second from this one. So the first visible CVD divergence was the bullish one over here. Then you even had another bullish CVD, and then the bearish one came. And the ones that appear first have the highest probability of playing out. Also more locally here, price retraced again, creating more bullish CVD divergences, where then the bearish CVD divergences came second, but therefore they do have a lower probability of playing out, which now is the case as the bullish CVD divergences have played out. This high is taken, so this CVD played out. This one played out yesterday as shown on the stream when this high was taken, and this one has played out now as well as this high got taken. Now, if we zoom out quickly, and look at the 12-hour, I at least wanted to show you that simple support and resistance areas can be incredibly effective. The support resistance areas that you see on the chart are from the 12-hour and the daily time frame. And I've been showing these just like a few times, but what you can see over here, we had the range, price moving to the downside. You have the support area turning into resistance, price moving down, where over here you had resistance, bit of support, bit of resistance. Wasn't much of support over here though, moved down, went to the lower edge where we had a support resistance flip, is basically ranging between 3 levels over here, right? Moving up, moving down again, and finally price managed to move above, find support, next level, find support, next level. Is it going to be the same? Find support, potentially next level, where there is not too much left over here. So this is definitely interesting, and the support area or the resistance area above us is between 29.5 and 29.7. So in that case, one could potentially fill this whole wick to the upside, maybe even take the high in this particular scenario. And the support area, the support area over here is between 28k and 28.5k. I'm stumbling over my words over here. So if we then finally look at the probabilities, then more locally, the probabilities are higher for price to see upside first, as explained, mainly because of this structure over here, as explained yesterday in more detail in the live stream as well. This is not a bullish structure, not an impulsive structure, so probabilities are higher to take this high, which over here I wrote in the probabilities box as well. But if we then zoom out, we have two things to say. Either on the micro, we have a higher probability of being bearish because this is a 3-wave structure over here, right? And if this is a 3-wave structure, then probabilities do increase for price to take this low, except for this scenario where Y is in and you're going to be looking for price to move towards the upside. And this is the reason why this over here has to be taken with a grain of salt, because I wrote at the bottom already yesterday, observe the reaction if price can make it to the target box, which means the white area over here, the white target box over here, which is sitting between 29.1 and 29.4 because of the bullish scenario. Yes, this is a 3-wave structure, but it might be an X for a triangle Y and then continuation to the upside where you're going to take this high. Okay, so locally, bullish was priority. Taking this high had the highest probability, and then it is up to observing the reaction. And then if the reaction is interesting, then we can look for a move down. But if it's just a big push, then of course there is no interest. We got to observe the reaction potentially at the target box. So this is what I wanted to say. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.